I strongly believe that the financial system is rigged against us. I've looked at how the financial system works. I've I've learned pretty in depth how the financial system works, what investments are, how money works, all that stuff. And I can confidently say that this thing is designed to keep the average person behind. And in this presentation, I'm going to try to explain. I'm going to try to teach you how even investing in the stock market, for example, is a problem, right? The stock market is a problem. The real estate market is a problem. All these things are designed to keep one group of people working while the other group of people gets to sit back and relax and enjoy their days, right? So the system is designed to keep this happening, and it doesn't work when too many people try to sit back and relax, right? We see what we saw over the last few years where prices went up. So many people wanted to become financially free. They wanted passive income, and rates were low enough, interest rates were low enough so people could borrow as much money as they wanted to, and they could buy as many houses as they want. They could invest in the stock market. They could do whatever they wanted, right? And I think that's a massive problem. It is one of the main reasons for the wealth gap that we experience today, and it's all intentional. I've noticed that a lot of people think they can get away from these costs going up because they can invest in the stock market, right? So this S&P 500, great tool. You can keep buying companies that are making money, that are continuously making profits, but you have to look at more than just the price going up. This is a chart that I saw from the Apollo Institute. It's just it's a research firm. They posted this chart showing the correlation between the global M2 money supply. So the M2 money supply is just the supply of money the supply of money entering the economy, right? And when you look at this, you can see that the S&P 500 is growing almost exactly in proportion with the M2 money supply. As the money supply goes up, so does the S&P 500, right? And that's going to probably continue to happen for a very long time. It's directly related, and we already know it, right? So how is the money even created? So you're probably wondering, oh, what is the money supply? The money isn't increasing. We get paid. There's a lot of things here that you may not understand, and that's perfectly fine. My goal here is to explain that to you. So in this chart, you can see that the amount of money entering the economy keeps going up. The S&P 500 keeps going up. But why is that? You also notice from this chart, I saw this from, the website is WTF happened in 1971. This is a chart from there. This has been posted all over. You can see here the cost of living in 1971. So you can see here $25,000 for a house. Average income is $10,622, right? New car, $3,560. Average income, so that's about 35% of the average income. A new house costs about 2.5 times the average income. Today, a house in Canada costs something like $800,000, and the average income is about 70 to 80,000, right? So a house is now 10 times the cost of the average income, when back then it was 2.5 times. So the difference is just mind-blowing, right? You can't even imagine where this is going. Over the long term, it's not like this is going to stop growing, right? It's going to keep going up. It's going to continuously rise, right? There's no way for this to go down, because as the supply of money increases in the economy, as money is added to the economy, costs will continue to rise, right? And that's just the way it goes. So now we have the new house. A new house costs something like 10 times the average income. A new car costs something like I think a new car is actually on par with the average income, if not even a little bit more, right? From 25% of the average income to on par or a bit more, which is very scary to even think about. And what we're noticing is that new generations, they're not only getting paid significantly less in proportion to the things that they need, they're also going into life with massive amounts of debt, right? So if you look at this chart, I graduated in 2010. So it's around the third number. I don't know if you can see it, but it's the third number there. when I got my degree, it cost about, was it $25,000? Now the same degree is costing $50,000, right? So where's that money coming from? It's not like the people who are taking those degrees are getting paid more. They're not even getting paid yet, right? Most of them haven't even done a job yet, right? So what these people are doing is they're just entering the economy, and they start off with these massive payments where they're paying $1,000 a month towards their student loans. They can't afford to buy any assets. They can't afford to buy even the S&P 500. They can't afford to buy it. Most people have no financial background. So what they're doing is they're just stuck paying these student loans for decades. I've actually met with people who are paying their student loans in their 60s, right? In their 60s, they're still paying their student loans. And it's very scary to even think about, because they're not even doing the job that they went to school for. The job that they're doing isn't even related to what they went to school for. So at this point, I think most people need to consider that they're probably never going to be able to retire. I don't even think people have thought that far. Most people haven't even thought of that, because if you can't even plan till the end of the month because you're living paycheck to paycheck, how are you going to plan for retirement, right? Most people are not. They don't have the energy to work 3 jobs, 4 jobs, to work around their finances. So I think the system is completely built to it's designed to do this, right? So the fewer people who are thinking about retirement, the more labor is available, the more people are forced to work literally forever. People don't even think about retiring because they can't retire. They know they can't. They can't even make it to the end of the year, let alone retire, right? Their expenses are so high. Everything is just continuously going up. And as a proportion of our overall income, we can't even live our day-to-day lives, right? I'm fortunate enough to not have that problem. I'm fortunate enough to not have that problem. My wife makes a decent amount. I'm working on a business. So, but there are a lot of people out there who are working 3 jobs, 4 jobs, and they can't even pay their rent, right? I know a lot of people who are I know a lot of people who are working for Uber Eats, for example. I know people who are working for just all these side hustles, the gig economy, and it's because they can barely make ends meet with their first job, right? And that's a problem. And over time, again, this is a chart from WTF happened in 1971. We can see here that productivity and compensation were pretty much on par until 1972, right? After that, productivity skyrocketed and compensation didn't, right? Part of the reason for that is that technology, of course, improves, but the problem is that before this, technology was also improving, right? It's not like technology suddenly started improving and before that it wasn't improving. It was always improving, but it's just that in 1972 something happened that made it so that compensation is no longer increasing. We can also see this in charts of on the same website. You can see quite a few correlations there. You can see quite a few results there between 1971 and something happening, right? Something happened where the poor got poorer and the rich started getting richer, right? And there's a reason for that, right? There's a very, very deep reason for that. Most people think, oh, it's just because of the president's problem, or it's a president's fault, or it's climate change, or it's or this or that, whatever it is. But all of these reasons are basically just hiding the real factor in all of this, and the real reason for why people are getting poorer, people are making less money over time, people are they're struggling to even maintain the same lifestyle that they had a few years ago. So there's a chart that I constantly share. If you watch me, if you follow my content on Twitter, on Instagram, you've probably seen this chart before. If you haven't, let me explain what it is. So it's essentially just a chart that shows the purchasing power of the US dollar over time. So the US dollar over time has bought fewer and fewer things. So if you look at the bottom left here, you can see that $1 bought 30 Hershey's chocolate bars. Over time, that dropped to 10 rolls of toilet paper, 10 bottles of beer, 20 bottles of Coca-Cola. 20 bottles of Coca-Cola is in 1964. Over time, you can see that it continues to drop. right? So $1 bought 30 Hershey's chocolate bars in 1913, I think it is. 1913, one of those, yes, 1913. $1 bought 30 Hershey's chocolate bars. Today, $1 buys not even a whole chocolate bar, right? Back then it was 3 cents per chocolate bar. Now it's more than $1. So over time, the value of the dollar is decreasing. This is the correlation, right? This is the thing that people seem to ignore. People don't seem to understand. It's not that the cost of things is going up. It's that the purchasing power of the dollar is decreasing. The purchasing power of the dollar should be increasing because over time, we have technological improvements that make it so that purchasing power should go up, right? Think about it. We have self-checkouts at Walmart. Everybody is paying for their checking out their own groceries, and yet the cost of living is going up. What are a lot of the, I know there's a lot of costs that Walmart has, but labor, getting rid of cashiers. I remember back when there was a point where there were 15 cashiers, right? 15 cash registers. Where did those wages go, right? Why are things still getting more expensive, even though we're doing the labor for ourselves? We're not even paying somebody for the labor. They're getting free labor out of us, and yet our groceries are still doubling in price, right? So all of this is a problem. I know we're all dealing with this. I know this is something that most people probably haven't thought of. This is probably something that most people can't wrap their head around yet because they haven't gone through it. They haven't thought about it. And this video, I'm going to make sure that you can wrap your head around it, right? In this video, I'm going to explain to you why the dollar's value keeps going down, why we keep losing purchasing power over time, why everything just keeps getting more expensive, why we get less for we pay more and we get less, right? So all that's going to be covered in this video. But let's start with one very, very important topic. What is money? So to me, money is something that's, so I did the CFA. We didn't really talk about this topic. We didn't really talk about where our money is made, how our money is created, all that stuff. We've talked about a little bit about how it's created, but we never talked about potential alternatives. We never talked about other things that can be used as money. So because we didn't do that, we didn't really talk about what the functions of money are. I don't remember a single page on the functions of money. I don't remember a single page talking about how money is really in depth, why our money is losing value over time. There was nothing about that. It was mostly just about how to invest and protect your purchasing power, right? But only a small group of people can invest. Not the entire world can invest, right? Let's say you go to somewhere in Asia, somewhere like let's say Thailand or Jamaica or something like that. Most of those people aren't investing. Even most of the people in developed countries are not investing, right? Like in Canada, there's a lot less than 50% of people are investing because they want to protect their purchasing power, right? They just can't afford to. And over time, we see that newer generations are investing even less. And there's a reason for this, right? There's a reason for this. The reason is that we have no education. We're not teaching people how money works. We're not teaching people what money is, right? And this is something that should be taught, in my opinion, in elementary school. I think everybody can understand this. You don't have to be at a certain education level to understand this. This is something that everybody can wrap their head around. But once you see, I'm going to try to lay this out in a way that you can wrap your head around it. This isn't just me data. This is not just me information. It's going to be something that ties everything together for you. So that's what this presentation is meant to do. So let's start with what is money. Money is supposed to fulfill certain functions. There's supposed to be certain things that money is supposed to do. When we think about money, most people just think about dollars, bills, coins, all that stuff. But that's not what money is, right? Money is something that's completely different. We have the US dollar, the fiat currency system, the world reserve currency, the US dollar. The US dollar is the world reserve currency. Everybody in the world wants it. Everybody in the world is willing to accept it because everybody recognizes it, right? Everybody knows that it's valuable. There's a group of people that are willing to back it, and there's a group of people that trust the system, right? Almost everybody in the world trusts the system. But in my opinion, US dollars are fake money. They're not real money. They're not fulfilling all the functions of money. They're not doing what they need to. They're not doing what they're supposed to. They're constantly losing value, right? So because that's happening, people have found other ways to fulfill these functions. So what are the functions of money? Let's say you go to a grocery store. You're going to save a little bit of money to go to that grocery store. Let's say your bill costs you $200. You probably get paid. Let's say you get paid on a Friday and you go to a grocery store on a Tuesday or on Sunday. You expect your money to have a certain amount of value, to retain a certain amount of value in that period of time, right? And I think this is what makes things so dangerous. We focus so much on short-term expenses that we don't realize what the long-term impact of a broken financial system is. So we save money for, let's say, groceries. We go to the grocery store. We value whatever food we want. We say, oh, apples are worth $1. Grapes are worth $5 a pound, whatever the prices are. And then we expect the store to accept that money in exchange for that food, right? And most people are willing to accept dollars in exchange for something that they assign value to, right? And that's perfectly normal. We see that as just a normal occurrence because most people are using the dollar, they're earning the dollar, and they're saving in it on a day-to-day basis. But over time, fewer and fewer people are doing that. So what is money supposed to do? Money has three functions. These functions are as a store of value, a medium of exchange, and a unit of account. When any of these functions isn't working anymore, it breaks the entire financial system, right? When people collectively believe that we use a form of money and it does these three things, but it doesn't, it breaks everything, right? Because people are working for that money. They're giving away their time. They're giving away their energy, their finite energy, and they're getting back something that doesn't work as money. It doesn't work as what they expect it to be. So most people consider that the US dollar is a great store of value. They consider that the US dollar is a great medium of exchange. You can exchange it for things. You can get things back. If you give it away, you can get something in exchange, right? They also think that the US dollar is a great unit of account. There's some issues here, right? So let's say the store of value. When we hold dollars, we expect them to have value. But over the long term, like I showed you in the chart, they're constantly losing value, right? So what does that do to the unit of account? Unit of account means that you're supposed to be able to plan with this, right? You're supposed to be able to use this thing to predict where to be able to save for the future. So let's say if you were to save dollars for retirement, you're using that retirement goal whenever that is, you're using that as it's a goal you have in the future, right? It's a long-term goal. You're using the dollar value that you have to plan for it. So if you save a certain amount of money, you expect that, oh, I'll be able to get to retirement. But most people are being disappointed, right? Most people are not getting to retirement because the money that they save is not worth what they need it to be saved, what they need it to be worth, right? So if you just keep your money in a bank account, your money is constantly losing value. Over the next 30 years, the dollar will probably lose 90% of its value. And there's a very, very specific reason for this, right? So let's go into the next slide. To fulfill these functions, the three functions that I was mentioning before, store of value, medium of exchange, unit of account, your money needs to have certain characteristics. These characteristics are fungibility, so each unit has to be equivalent. So let's say you have apples. Two apples are not going to be the same, right? So you can't use apples as money because if I say, oh, this is worth one apple, what quality of apple? What grade? What if this apple has blemishes? Or what if this apple is damaged in some way? Or what if this apple is sour and it's not supposed to be? So something like apples are not fungible. Dollars are very fungible, right? Dollars are very easy to exchange for one another. Your money also has to be durable. I think the US dollar does okay with this. If you damage your dollars, you can easily go to a bank and get another bill. But dollars are generally not a problem if you keep them. I mean, we find people have stored away thousands of dollars for years, right? For tens of years, but they're physical, so they're not the best with this. But let's say you consider something like if you consider something like digital money, where we use money that's on bank accounts, we don't really touch our money anymore, right? We leave it in a bank account and we use credit cards, debit cards. So in that case, dollars are very durable, right? You can't destroy digital information. Dollars are saleable. Money has to be saleable. Dollars are saleable, meaning that you have to be able to sell them for. You have to be able to sell your money for other goods whenever you want to. You should be able to easily exchange it for something else. Dollars are great for this. A lot of people accept dollars. Like I said, it's the world reserve currency, so that's not a problem at all. But if you have something like, let's say diamonds are very difficult to be paying for things in, because if you buy a diamond and you try to sell it, you'll probably lose 50% almost immediately. Money is also supposed to be portable. Dollars are great with this. You can move dollars across the world. But the issue is that you need to get a lot of permission. Physical dollars really don't work for this, because let's say you wanted to buy something from Amazon. If you wanted to buy something from Amazon, you'd have to go into the office, right? You have to pay them in the office. You'd have to go to them with physical dollars to pay for something. That would completely defeat the purpose of e-commerce. So we need digital dollars for this. So dollars are not the greatest for this, but the digital dollar is fine, right? Divisibility, I think dollars are great. You can break them down. You can have down to pennies, or you can have up to millions, billions of dollars, right? Dollars have no problem with this. If you want to pay for, let's say, a coffee versus a house, you can do that. You can do both. On the other hand, let's say if you had a diamond and you wanted to break that diamond down, the smaller diamonds are worth a lot less. Bigger diamonds are worth a lot more, right? Just proportionally, they're worth orders of magnitude more. So this is I think dollars are great for this. They work very well. There's no loss in value when you divide them. The only issue with dollars is that they're not very scarce, but I'll go through why. Scarcity is very important, because if money is not scarce, it means that you can potentially add more supply to the economy, and anybody who holds it, anybody who saves in it, loses value, right? Let's say in the case of the dollar, the U.S. government can borrow as much as it wants. The U.S. Federal Reserve can print as much as it wants, but we have to work for it, right? There's an imbalance there. That's a problem. Over time, we use different forms of money. Commodity money worked really well because commodities can't be printed. On the other hand, dollars can be, right? Commodity money worked really well because you had to put in time to grow, or to find, or to produce those things, right? So cattle, for example, cattle took thousands, hundreds of hours to grow, maybe not thousands, hundreds of hours to grow. Lots of labor, actually thousands, yes. Lots of labor, lots of time, lots of work, lots of just inputs, right? And when you have cattle, it's proof of work, right? It's proof that you did something to create this, right? Let's say we survive all the way until now. That's proof of work that we survived, right? So commodities are essentially a concept called proof of work. So they're a result of putting in the work and getting something in return. Shells worked really well because you had to find shells. You had to go into the water to find them. But over time, these things didn't really fulfill the functions of money, or they didn't have the characteristics of money. They didn't work very well because cattle are not easily divisible. Cowrie shells eventually became not so scarce. And over time, we pretty much settled as collectively, we settled collectively for precious metals as money. And I think that was important because it gave us the ability to save, right? It gave us the ability to store value for the future. Let's say, for example, if you had cattle, you can't really store cattle in a safe, right? You can't store cattle in your pocket. You can't move around with cattle. It's very, very easy for somebody to see that you have cows, right? And if they want to take what you have, they can take it from you. On the other hand, with gold coins, with silver coins, precious metals in general, they're very compact, right? So you can move around with them. You can use coins to pay for different amounts of value. You can, let's say the coin at the top left here was called the aureus, and the one right below it is called the denarius. So the denarius is 25 denarius costs, 25 denarius is worth 1 aureus. So 1 gold coin is worth 25 of the silver coin right below it. There was zinc, there was copper, all different kinds of coins. But over time, we pretty much settled on gold, right? We settled on gold because gold was very widely distributed. There were a lot of things that gold could do. It's a great conductor of electricity. It's very malleable. There's a lot of functions to it. But over time, we figured out that that was what worked. And gold is also very difficult to create more of, right? So if you want to create more gold, you have to go deeper and deeper into the earth, right? Because there's a certain level of pressure that has to be applied to create gold. But there is a lot of gold. It's not like gold is scarce. There's a lot of gold, but we just haven't been able to get it yet. It costs a lot of money. So the proof, the work costs a lot more. To get that proof of work, it costs a lot more. Gold bars are the proof of work. So when you mine, for example, gold bars of proof of that work, right? You get gold in exchange for mining, right? So let's go back to the characteristics of money. Gold worked really well because it was fungible. Every ounce of gold is equivalent to every other ounce of gold if they're the same purity. Gold is pretty durable. Gold is very durable, actually. Gold is the most durable thing that we have. You can't destroy gold, right? You can't. All the gold that we've mined is pretty much still in existence, right? We have, just looking at how gold is created. Gold is just an atom, right? You can't destroy atoms. I guess we haven't figured out ways to do that, but gold is all there. It's very durable. You can't destroy it. If you have it in your safe, you're not going to go in a few days later and see that it's rotten away. Gold is saleable. Everybody around the world accepts gold, right? Gold is great for that. Gold is portable. You can move it around. But the issue is that gold is physical, right? So in the modern era, you can't use it to transact because we need internet, right? We need to transact over the internet, for example. Gold is also not divisible. So to have, it's divisible, but it's not divisible enough. So let's say you had to pay for a coffee and you had a bar of gold. Let's say this bar of gold on the right side. How would you pay for your coffee? You'd have to take something to chisel off bits of gold and pay for things, right? That's a problem. That's not going to work. Gold is scarce. Gold is scarce for what we have. Available quantity is scarce, but overall, it's not. We have no clue how much gold there is. If we find ways to get to asteroids, if we find ways to get to gold under oceans and very, very deep seas, it'll become a lot less scarce, right? It's just not profitable to get there to that point yet. But gold hasn't really kept up with inflation over the last, let's say, 20 years. Gold has pretty much underperformed. Inflation is something where the cost of living keeps going up. Gold pretty much hasn't kept up, right? If you consider the increases in the cost of living, gold hasn't kept up with. I think over time the issue with gold was that we found ways to create fake gold. So let's go into how gold is stored. So to solve the problem of portability and divisibility, we actually started storing our gold at banks. We started giving them our gold and taking gold certificates in exchange, or US dollars at one point. We started using these gold certificates and we just left our gold with banks. We trusted them to hold it for us, right? And we'd get these gold certificates in exchange and we would spend those and we wouldn't even think about where did our gold go, because we trusted these institutions, right? We just expected them to hold we expected them to hold what we gave them and to protect it. And what they did in exchange was they gave us these papers. And this led to fractional reserve banking. So what fractional reserve banking is, if you think about it, you can print a lot more paper. You can print a lot more paper in the time that it takes to mine, let's say, $20 worth of gold, right? You can print a lot more of these bills than you can mine gold in the same amount of time, right? So what these banks were doing is they were taking in a certain amount of gold and they were giving out 2, 3, 4 times the amount of gold, right? So let's say they took in $20 worth of gold, they would give out $100 worth of gold certificates. So the reason why they did this was because they would make money from doing it. They would charge interest, right? And this is just it's just the fractional reserve banking system. That's pretty much what it was. Even today, we have the fractional reserve banking system, but today, the money that we have is not backed by gold, right? We have gold. We had gold certificates back then, but now the money is not backed by gold. So let's go back. Let's go back to what these banks did with the $20, the gold certificates that we had. They essentially printed a lot more than the amount of gold that they had in their possession. So what was happening is more money was entering the economy. They were earning interest, but when people wanted to get their gold back, they weren't able to pay them back because you had $20 worth of gold certificates, but you only had you had $100 worth of gold certificates, but you only had $20 worth of gold. So if $100 worth of gold certificates tried to be, if people tried to redeem $100 worth of gold, how are you going to pay them back if you only have $20 worth of gold? So if they try to pay you, if they try to get out $100 worth of gold and you only have $20 worth, how do you pay them back? That's essentially the problem here, right? That's what fractional reserve banking is. That's the problem. So what these banks were doing is they were issuing a lot more money. They were issuing a lot more gold certificates than they had gold in their stores, right? And you can see from this chart, basically, if somebody deposits $1,000, what the bank is going to do is they're going to keep 100 and they're going to loan out 900 and they're going to make interest on that. But the system now has $1,900. It doesn't just have 1,000; it has 1,900 because there's the first person who expects to have 1,000, and then the second person who has 900. And whatever the person does with that 900, they're eventually probably going to deposit it in a bank account, and they're going to put $900 back in the system. So now the system has, so now the bank, let's say the bank does the same thing and they keep 10%, they keep $90 and they loan out another $810. This is happening right now, right? This is happening in real time. This didn't just happen back when we had gold certificates. It's happening right now, right? So what this caused was the roaring 20s. What was happening is more and more money was entering the economy. More and more fake dollars were entering the economy and being used to spend on, let's say, stocks, real estate, gold, all that stuff. We had the stock market just skyrocket. And this seems very similar to what happened from 2019 till 2021, 22 almost. This seems very similar, right? And the charts the chart just shows you that there's so much money in the economy that people are using it because they have excess. They're using it to buy stocks. They're using it they're putting it towards stocks because they have so much excess. Banks found a way to help people take on debt. People found ways to defer their spending. They just borrowed. Because banks were giving out more money, right? They were lending more money to people. They were taking people's deposits and they were lending it to other people. A lot of this money went to stock speculators, right? A lot of money went into mortgages, a lot more lending for mortgages, a lot more lending for businesses. And eventually, what this led to was inflation, very similar to what happened over the last few years, right? Very, very similar. It led to the Great Depression. It led to prices rising. It led to interest rates having to be increased because as prices rise, banks want to make sure the interest rates have to go up to decrease the incentive to borrow, right? So interest rates have to go up. So interest rates went up from 1928 to 1929. Speculators defaulted on all their loans, and people started panic selling real estate and stocks, right? This was really difficult because it led to this. This is what it led to. So we saw from the last chart, it was up to the very peak, and then it just crashed. Everything went all the way down below where it even started, right? Because there was not enough money in the economy to support the high interest rates. Most people couldn't afford it. Most people couldn't actually afford those high interest rates. So when the Federal Reserve increased interest rates, banks started collapsing because people could no longer afford to pay back their loans, and they started just selling what they had. They started selling all of the assets that they had, and they just started making the market crash. And as people were panic selling, as people were getting rid of their assets, everybody else in the economy, all the savers, basically came to believe that banks are going bankrupt. Banks are losing all their assets. So we had bank runs. A bank run is basically where you have a fractional reserve banking system where there's a lot more money in the system than there is money in the bank accounts, right? In the bank's vaults, in the bank's savings. So a bank run happens where too many people try to withdraw their money all at once. We saw this happening with Silicon Valley Bank 2023. Silicon Valley Bank collapsed, right? But you have to understand that the entire system is operating the way that Silicon Valley Bank was working back then. It's just that Silicon Valley Bank had somebody say, "Hey, take your money out." I think it was Peter Thiel that said, "Take your money out. Silicon Valley Bank is toast." And this is what was happening to a lot of banks in 1932 to 1933. So banks didn't have enough money. People wanted to take their money out. Banks just saw their money disappear. They had no money to pay back their depositors. Fear spread quickly. Banks started collapsing. Banks started closing down. Depositors wanted to take their money out. Of course, they wanted to take their money out because this was their lifelong savings. This was their entire all the work that they've ever done. I mean, back then stocks weren't as widely spread as they are right now. People didn't really buy real estate as an investment. The dollar was expected to continue to just hold its value, right? What banks started doing was they started doing because all these banks started shutting down, people started withdrawing too fast. Banks started shutting down for extra days. They started doing bank holidays to slow down people from withdrawing. Right, fewer people withdrawing means less likelihood of banks to go bankrupt, right? Or sorry, banks to collapse. So fewer people taking their money out because you actually had to go into the bank at that back then. There was no internet withdrawals and all that stuff. You had to actually go into the branch to take your money out. People were lining up around the block to take their money out. So as banks were closing, of course, fewer banks are open, fewer people can withdraw, slows down the collapse of banks. So what this was used for is to basically assess all the banks in the area to make sure that all the banks that are expected to have withdrawals have money, right? So on February 14th, 1933, the US government assured people that their money is safe to stop the panic, to stop them from withdrawing. And depositors did that. Something like 50% of deposits went back into the banking system. So pay attention to these dates. February 14th, 1933. February 14th, 1933. So back here, you had 1932 to 1933. February 14th, 1933, the US government said, hey, keep your money in the bank account. Don't worry. You don't have to worry about your money disappearing. It's all false. It's all rumors. Put your money back. Depositors started putting their money back. They trusted them, right? They put back something like 50% of the deposits. And if you pay attention to these dates again, February 14th, 1933, April 5th, 1933, we had Executive Order 6102. So Executive Order 6102 was an order to give away all of your gold and to basically surrender all of your gold coins, all your gold bullion, and all your gold certificates, and basically made it illegal for people to own gold. But back then, of course, they buried gold in the ground. So not all the gold, of course, went into the central banking system. But basically, the U.S. government made it illegal for people to hold gold, and they forced them to sell all of their gold to the Federal Reserve System for $20 an ounce, for $20.67 an ounce, something like that. And what the Federal Reserve did was it took all this gold, it printed a ton of money, it gave it to people, and it had printed so much money because it had to basically help all of its banks survive. It printed so much money that by the next year, 1 ounce of gold was worth, so it went from $20.67 to the next year is worth $35 an ounce, right? And the reason why this happened was because they just printed tons of dollars, right? They printed so many dollars, fewer and fewer people wanted dollars. Of course, there was now almost a black market for gold as well. But this was the $35 was just the widely accepted rate. And that was the rate that was accepted globally. And in 1944, so from 1933 to 1944, over that time, we saw gold's price just be maintained at about $35 an ounce. And all of these countries that had participated in World War II now needed to rebuild their economies. So they had a lot of this destruction, they had a lot of this death, and now they had to rebuild their economies. So they wanted a way to transact, which was easier, so that they could basically use something that the entire world uses to make it so that everybody can transact with one another without really having any problems, right? And everybody pretty much settled on the on the US dollar standard, right? So that's what the Bretton Woods Agreement was. 44 countries came together in 1944 and they said, we'll give you all our gold. You give us dollars in exchange and we'll use these dollars to trade. But the issue was that the U.S. government over the next couple of decades, of course, they had given all these people dollars. All these other countries had expected that these dollars will retain their value. But what the U.S. government did was it just printed large amounts of money. It funded the Great Society program, which is education, medical care, poverty, and transportation-related issues. So just to solve all those problems. And it also spent tons on the Vietnam War, right? It spent a lot on the Vietnam War, and all this money was printed. But the problem here, the main problem here was that this wasn't their money to spend, right? This was the money, this was the gold of other countries that they basically used to print money against. They created all this money. They created all these IOUs. They just flooded the market with them, but they didn't have enough gold to back it up, right? So they printed more than they had in reserves. They printed more gold than they had. They printed more dollars than they had gold in reserves, based on that $35 per ounce. So I think it was starting in mid 1960s. The Federal Reserve started experiencing a bank run. So again, like I said, when the central bank doesn't have enough of whatever form of money it is, in this case it was gold, if too many people start withdrawing their money at once, if too many governments, if too many countries started withdrawing their money at once, we have a bank run. We have a problem with too many people trying to take their gold back. This is what was happening here. The Federal Reserve experienced a bank run. Too many countries wanted their gold back. They didn't want the US dollar anymore because they realized that, okay, the US government has printed so many dollars. We don't want this anymore. We want our gold back. But the US government didn't have enough gold to exchange for the amount of US dollars it had printed. And I mean, that's the only explanation, because what happens next is kind of scary, right? So this happened in about the mid 1960s. France was one of the first countries that started withdrawing their dollars. So let's look at what happened next. 1971, the US government severed the link between the dollar and gold. This was supposed to be a temporary measure. Keep that in mind. But this has lasted since 1971. Even till this day, the dollar is not backed by anything, right? The dollar that you're holding is backed by nothing. It's backed by trust, right? If you look at the dollar, it says at the top there, Federal Reserve note. It's basically a debt of the Federal Reserve. You're holding the Federal Reserve's debt. And the Federal Reserve can print as many dollars as it wants. The US government can borrow as many dollars as it wants. It can keep going. It can keep borrowing as much as it wants whenever it wants to. And this was a problem because all these other countries had saved in dollars for a very, very long time. But all the dollars that they saved were now worth significantly less than what they had started with, right? So let's say they had started with, okay, let's go back to 2019, 2020. So let's say China saved in, if China saved in treasuries are the US debt, US government debt. Those treasuries lost something like 30, 40, 50% of their value, right? That means that Chinese government lost, what was it? $500 billion. $500 billion they lost in the last 4 or 5 years. So that's exactly what was happening with this, right? In 1971, Richard Nixon ordered a 90-day wage freeze. He severed the link between the dollar and gold, and all these countries got basically screwed, right? The US government defaulted on its debts. It defaulted on all the debts that it had to these countries. It basically owed them gold, but it couldn't pay them back. So it said, no, we're not paying you back anymore. So what happened here was that the US dollar now became backed by nothing, backed by trust. Before this, the dollar was backed. We expected it to be backed by gold. It was considered to be scarce, but at this point, it was not scarce anymore. It could be printed at will. There was nothing backing it. There was nothing stopping the Federal Reserve from printing more. And this was a problem because anybody who held dollars lost tons of value. And the people who were smart figured out that they need to hold other things. They can't hold dollars anymore. They have to buy other things in order to store value. So they started buying stocks, real estate, bonds. Bonds are debt. They started buying gold. They started buying all these things because the dollar was worthless. The dollar was it was made of paper, right? It's going to continuously lose its value. And since that time, the dollar has lost a significant amount of its value. It's lost over 90% of its value in that time, right? And when you think about it, all these things have increased in value because all those dollars are going into this. As supply. So all these things are much harder to create than dollars. So as supply isn't increasing as much, more people want to get rid of their dollars. Overall, demand is outpacing supply, right? That's why the price of these things is going up. And what we saw over time was the internet era. We saw digital banking. We saw just people transacting online. And all these companies came in to help us with transacting. So we went from paper money to digital money, right? And all these companies had to be let's say, like I mentioned before, if you wanted to buy something from Amazon, you'd have to pay them in person. You had to go into the office to pay them. And I mean, that defeats the purpose of e-commerce, right? Um, what the financial services industry does is it takes money from us for providing the service that money is supposed to fulfill, right? So money is supposed to be a medium of exchange. Financial services industry extracts significant amount of money from us to be able to let us transact the way we do. So we use credit cards. How much money does Visa, how much money does MasterCard extract from us? They went from being worth something like zero a while ago to being worth $28 trillion or $28 billion, or sorry, $28 trillion. And it's expected that the financial services industry will grow at about 7.5%, and they'll be worth $38 trillion by 2027, because we need them more and more, right? Everything's going online. We have to pay for everything on the internet. And all these companies are taking a cut of everything, right? All these banks, all these payment processors, all these credit card companies, they're taking a cut of every single dollar that we have. Every single time we spend, they're taking 3, 4, 5%. But on top of that, they also have tons of control, right? So they're able to confiscate your money. They're able to ban you from participating in the global economy. Even if you, so if you do something wrong, let's say the U.S. government sees that you did something wrong, all these financial institutions can just freeze your money, right? They can just freeze your bank accounts. They can freeze your assets. I used to work in financial services, and I can't tell you how many times I saw people with all of their money basically just frozen because they had to do something. They had to pay for something, or they were having their wages garnished and they couldn't withdraw their money. Even if they had to pay, let's say, rent, they couldn't pay rent. They were this close to bankruptcy, but their money was locked away. They couldn't do anything, right? It also gives these financial institutions the ability to trace our payments. They can actually see everything that we're spending on, right? The more we go digital, the more they can see exactly what we're spending on. They can also take your ability away to transact. They can stop you from transacting. We saw that in 2020, 2021. I'm not going to go into details for that, but we saw that before. We're going to see more of that. We're going to see more people who are having their ability to transact taken away because they do something that is considered politically incorrect, right? Okay, so let's go into what is Bitcoin. So I think Bitcoin is the solution to all this. That's what I think. All this is a problem. Of course, the value of our money keeps decreasing. We're going to keep seeing the cost of living go up, not go down, go up, because the US dollar can be printed at will, right? When you value like a house, for example, in terms of something that can be printed at will, of course the cost is going to go up. The cost is going to go up forever, right? I think Bitcoin is the solution. Most people are not seeing it. Most people don't understand it. Most people don't want to wrap their head around it. They don't care, right? But I think Bitcoin is the solution to all of this. Your cost of living, if you continue to buy stocks, if you continue to buy real estate, you're going to have to continue to buy them. You're going to have to invest for 40, 50 years before you can become financially free, right? Because with stocks and real estate, with dollars, money is constantly being extracted from us. Money is constantly being taken from us. Bitcoin, in my opinion, is a solution, right? So Bitcoin was created by somebody named Satoshi Nakamoto. It was a person, group, individual. I don't know who it was. Nobody knows. Nobody can prove it. People will keep telling you, oh, they're Russian. He's Russian. He's American. He's Chinese. People will keep telling you that. Nobody knows. Nobody can tell you for a fact. People will say, oh, it's the NSA. It's the CIA. It's this. It's that. It's that. It's controlled by the government. It was the president. It was Putin. They'll keep telling you who it was, but nobody knows for a fact, right? It was an anonymous person who said that they were working on something called a peer-to-peer cash system. So they said, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. They created something called the Bitcoin white paper. If you just Google Bitcoin white paper, you'll see it. The main properties of the system are supposed to be double spending is prevented. So double spending is essentially fractional reserve banking. It's to stop people from spending the same money twice. There's no mint. There's no people. Nobody gets to be first in line to take Bitcoin. Whoever understands it, it's a market asset. Whoever understands it can get access, right? Um, this this message was sent to a group of people, after which it continued to be spread throughout the world. People around the world understand it. It went from a small group of people to a very, very large group of people. Now there's maybe a few 100 million people who understand Bitcoin. Maybe even less. I think a few 100 million people own it. Maybe 200, maybe 100 to 200 million people own it, but very, very few people actually understand what they have, right? So this thing was supposed to be something that was supposed to revolutionize money completely, right? People can be anonymous. They don't need financial institutions in the middle. They don't need any of that. All that stuff can be taken care of. That can be eliminated, right? All this stuff to do with, let's say, fractional reserve banking, we don't have to deal with that anymore because there's no debts in the system. There's no depositing in the system. The old system is dependent on depositors like me and you giving our money to banks so that banks can lend it to other people. That's what the old system is reliant on. This new system is not reliant on that. This new system is reliant on people taking care of their own assets, people taking responsibility, people understanding how money works. When you understand how money works, I think it becomes a lot easier, right? To wrap your hand around Bitcoin. I think once you saw all of that stuff that I was talking about, you can see what the problems are. It's very, very easy to see. And I think Bitcoin solves all those problems just based on what's in this white paper. Okay, so according to Satoshi Nakamoto, financial collapses happen for a very specific reason. These collapses happen because banks lend a lot more money than they should. They give out way more money than they should to people who shouldn't have it, right? They try to make things equal, and they try to give people loans to make things less expensive, to be able to pay for things like, let's say, student loans, for example. How many people would have taken student loans? How many people would go to school if there was no such thing as a student loan, right? Maybe they would have done something better. Maybe they would have done trades. Who knows? For example, maybe I wouldn't even have looked into finance if there was no such thing as student loans, if we just went straight into having money, right? There would be no finance degree at that point, right? There would be no need for it. But we have all these people in the middle, all these financial institutions in the middle that are extracting wealth from us, right? They're using our money to make more money on top, right? Satoshi Nakamoto's goal was to basically eliminate all of that, to get rid of all of that, to stop that from happening, to stop the financial institutions in the middle from extracting wealth from us. So think about how many people are in the middle. All these companies, right? There's tons of companies in the middle that are charging us for every transaction. They're extracting a certain amount of money for every transaction that we do, right? And that's going to continue to happen as long as we don't change the system, right? All these financial institutions will take more and more. Visa is a publicly traded company. Their goal is to make profits. They will increase their charges if they have to, right? And you can't rely on them not doing that. As they increase their charges, your cost of living will go up, right? This is something that you need to understand. Bitcoin eliminates all of this. Bitcoin makes it so that we don't need this. So there's two things that you need to learn, that you need to understand about Bitcoin. So the first thing is the token, and the second thing is basically the network. So let's start with the token. The token is it's a digital token. It's just issued by the Bitcoin network. There's a maximum supply limit of 21 million units. One Bitcoin can be split into 100 million units, so you can split them into smaller and smaller units, 100 million Satoshis. These tokens can be moved between addresses, right? So you can move them basically between bank account to bank account. So it's like if you had dollars, you can move dollars from bank account to bank account. Basically, you can move Bitcoin, these tokens, from bank account to bank account, from address to address. Bitcoin is, in my opinion, digital cash. We haven't figured out ways to use it as such yet. These transactions can't be censored. They're all peer-to-peer. They're private. I can send you Bitcoin without anybody knowing. I don't need to get permission from a bank. I don't need to ask a financial institution. I don't need to take on some kind of debt. All I need to do is scan a barcode. That's it. Once I scan that barcode, I can send Bitcoin over. Very easy, very simple. There's no central point of attack and nobody to sue, right? Nobody knows who Satoshi Nakamoto is. The computers that run Bitcoin are all around the world. There's no central point of failure where if this computer is shut down, the entire Bitcoin network will go to zero. Everything is public. Everybody has access to everything. On the other hand, the current financial system is fully controlled by the central bank, right? The central banks, the Federal Reserve, the U.S. government. The U.S. government fully controls everything. We already know it. They may say that they're completely independent, but they're not, right? The U.S. government has full control, right? So we have Bitcoin here. Bitcoin has all of the characteristics of money. There are some things that people may say, it's not fungible because there's tainted coins and all that stuff. But I don't think that's an issue because on the network level, it doesn't matter. The network will, if you have Bitcoin and somebody else is willing to accept it, the network will it'll process your transaction. It does not matter where your Bitcoin came from, who it came from, all that stuff is irrelevant. Bitcoin is durable. It can survive any wear and tear. It can clearly it's survived 15 years. It'll survive another 15 years. Bitcoin is becoming more saleable right now. Most people don't understand it. Of course, they're not willing to accept it, but over time, it will become more saleable. More people will understand it. More people will figure it out, and more people will be willing to accept it, right? It's also portable. Portability is so important because we want to be able to pay somebody across the world, right? If we're becoming a global economy, we want to be able to pay somebody across the globe without having to rely on people in the middle who are taking a cut, right? Let's say if I had to pay somebody in China, I can scan a barcode and I can send them Bitcoin if I want to. Nobody can stop that from happening. Of course, it may not be, people may not like it, but how I spend my money shouldn't be somebody else's responsibility, right? Nobody should be able to stop me from spending my money the way that I want to, right? If I want to buy, let's say China has a really high quality phone and I want to buy it. If I want to buy it, I should be able to get it. Nobody should be able to say, hey, you can only use this brand or this brand. They shouldn't be able to stop me. And that's what these financial services companies in the middle can do, right? They can stop you from sending your money. I know there's people who can't buy Bitcoin because these companies, these financial services companies in the middle, are stopping them from buying it. They're not letting them send their money over. That's a problem, right? That makes it so that dollars are less portable. They're becoming less portable because you can't move them. You can't spend them how you want to. That's an issue. The next one is divisibility. You can divide one Bitcoin into 100 million units. And after that, it's just a code, right? You can change it you can break it down even into smaller units. Sorry. You can break it down into even smaller units if you want to, right? It can fit any amount of money. You can spend any money. You can buy any amount of Bitcoin you want to. You can sell any amount of Bitcoin if you want to. It's also very scarce, right? Like I said, there's only ever going to be 21 million. There's never going to be more than that. It doesn't matter what you do. It doesn't matter where we go. It doesn't matter how rich the people are who own it. We're not going to be able to change the supply to make it, let's say, 42 million. If there's 42 million Bitcoin, it would be a disaster because the people who own it, their money will be devalued, right? Just like the dollar. But the goal here is to make sure that doesn't happen. And people will do whatever they can, right, to make that happen. The system is built to make sure that doesn't happen. The system is designed to make sure that doesn't happen. If you look at this chart, so I created this chart. I thought this would be very valuable. This is basically the supply schedule for Bitcoin. You can see when the halvings are. So the halving is basically where the supply is decreased by 50%. So you can see from this chart, Bitcoin was produced at a certain rate. So from January 3rd, 2009 to November 28th, 2012, 50 Bitcoin were produced every 10 minutes. So that means 7,200 Bitcoin per day. And by the end of that period in 2012, 10,500,000 Bitcoin were issued. So out of the 21 million, 10,500,000 were issued. People already owned it. That was 50% of the supply, right? So basically Bitcoin is the supply is decreased over time. It's decreased in 4-year periods. I actually go through this chart in the other videos that I have. So if you want to, you can watch them. But essentially this chart shows you what the supply is, right? Over time, this supply will never change. We're never going to be able to change how the supply schedule works, right? We know for a fact how many Bitcoin are going to be produced. We know how many are available. We know exactly how many will ever exist, 21 million, and we know when they will be produced. right? Every 10 minutes, the Bitcoin network will continue to produce more Bitcoin. It'll continue to produce something called blocks of information. I'm not going to go into too much detail with that, but essentially what Bitcoin does is it continues to produce what we need. We know exactly how many Bitcoin will ever exist. There's no other asset that works this way. And that's something that a lot of people are starting to figure out, right? So let's say you have real estate, you have gold, you have stocks. Stocks can be issued at will, right? Real estate can be built. You can build more real estate. There are going to be ways to produce real estate for cheaper and easier and with less labor, right? There's going to be ways to do that. So I personally think that something like Bitcoin could replace real estate as a store of value. So I was mentioning before, people were getting rid of their dollars, they were buying other things. I think that's what's going to happen, right? As people see that this is certain, this is going to happen, this is the way that it'll work. That's just the reality, is that people will flock to it over time. I don't think they understand it yet. Most people have no clue what this is. And that's perfectly fine. That just means you're early, right? If you really want to learn about this, if you want to put in the time, you're early, right? But over time, we can see that the price does go up. This is called a rainbow chart. If you go to the site at the bottom there, you'll be able to see what the chart is. You can see the exact prices, but essentially Bitcoin, it goes to a certain level and then it comes down. It goes up and it comes down. But over time, it increases by orders of magnitude. As more people understand it, more people want it, and the price goes up because demand is rising, but supply is fixed. Supply is actually decreasing over time, right? So the new supply entering the economy is decreasing over time. And over time, we're going to see fewer and fewer people who are willing to sell their Bitcoin because they understand what it is, right? They're going to want to hold it. They're going to see that this thing has a 10, 15, 20-year time horizon, right? A lot of people are going to be holding forever. They're going to hold for their grandchildren. They're going to hold for their great-grandchildren because of how predictable it is, right? We know that this is the schedule. We can see, do you see those last blue lines there? You can see there that that's where the last Bitcoin is produced. So from 2108 all the way to 2140 is where the last Bitcoin is produced. So we have, let's see here. Sorry, it's the one before. So number 25. So 2104 to 2108. It's right in the middle, but you basically there's 1.25 Bitcoin created. In those last blue lines, 0.64 Bitcoin will be created, right? So we know for a fact that, let's say if we save for our great grandchildren 50 years down the line, 60 years down the line, let's say 60 years from today, so it's 2024, 2084. Every day, 0.01 Bitcoin will be produced. Most of the supply will have already been issued. 99.9% of the supply would have been issued. By then, you're going to have to convince people to sell you Bitcoin. So a lot of people by then, I think, will be working for Bitcoin. They'll be selling their goods and services for Bitcoin. They're not going to be exchanging Bitcoin for dollars because nobody will be willing to accept Bitcoin for dollars, right? Sorry, nobody will be willing to accept dollars for Bitcoin because Bitcoin has this very scarce, it has this quality where you can't increase the supply. You can never go above that 21 million. On the other hand, we have no clue how many dollars will ever exist. The number of dollars will continue to go up. This chart will continue to go up forever. We're going to keep seeing this chart go up. The price is going to continue to go up because of these characteristics that Bitcoin has, right? The token is separate from the network. Like I said, the token is one thing, the network is another thing. This is what the chart looks like for the actual token. There's something behind it. So this is the second part. There's something behind it that actually makes sure that these tokens have a value over time, right? People can tell you, oh, they have no intrinsic value, they have no utility, they have no this, no that. But this network is competing with something like the dollar. And I told you that the dollar can be printed at will, right? The dollar has nothing backing it. It's backed by trust. It's not backed by the military. The military is paid in dollars. If the military stops accepting dollars, if the people in the military stop accepting dollars, what's going to happen to the dollar financial system, right? Eventually, I think the world is going to go to a Bitcoin standard because of the network. The network gives people property rights, right? What property rights means is that people can own things and they can be assured that it won't be taken from them. On the other hand, with the dollar, you can hold dollars, but over time, those dollars will be stolen from you, right? You know that for a fact. You know that the cost of living will continue to go up. That means that your dollars are losing value. They're being taken from you. Dollars don't lose value. That value is transferred to other people. That it's being extracted from you. It's being stolen from you, right? That's what it is. On the other hand, Bitcoin has these characteristics. The token has these characteristics, but then the network behind it is extremely powerful. There's something like 100,000 computers around the world that retain a record of the movement. So I told you Bitcoin can be moved from address to address. These computers just hold a record of where these Bitcoin went and where they came from and where they are being held. That's what it is. That's what the network is. This network is controlled by nobody. Nobody can stop it. Nobody can make it do something. Nobody can make it censor transactions. There's no way to do this because it's a global transaction. It's a global network, right? When the network is controlled by a small group of people, that's possible. But when it's global, nobody can stop it, right? Every government in the world would have to agree, and they can't even agree on minor things, right? This network is controlled by nobody, like I said. There's no need to sign up or register with a company like Google, Facebook, Instagram, all that stuff. You don't have to sign up. You don't have to sign up with a bank. You can just do it if you have an internet connection. That's it. That's literally it. There are no third parties involved. You can go with something like, let's say, the Lightning Network. The Lightning Network will give you more transactions, but there is going to be third parties involved. But the base layer does not require third parties. If you want to go with the base layer of Bitcoin, the network, the actual token, the BTC token, you don't need to work with, let's say, a different company. You can do it all on your own. You can run a node. You can run a computer. You can be one of these computers that retain a record of the movement of Bitcoin. The requirements are just simple, right? Internet connection and an internet connected device. That's it. This gives property rights. So this network gives property rights to people, like I said. It gives property rights to everybody in the world, right? The network basically has certain things that the network is used to send and receive Bitcoin. So that's a Bitcoin transaction. When you send Bitcoin and you receive it, it's a transaction. There's one sender and one receiver in every transaction, right? So parts of these transactions, things that you need to know. Private keys are just basically a password to access your address, your wallet. Your wallet is just a banking app. It stores your private keys. Your public key is basically your bank account number. You can use your public key. You can share it with people. You can send it to people and they can send you Bitcoin. The blockchain is like the central bank. It basically just holds the record. The central bank is what holds the record in the old system. The blockchain is what holds the record in the new system. But the thing is that everybody can have a record of this blockchain. In the old system, only a small group of people get access to that record, right? Only a small group of people knows what the central bank is doing. A UTXO is a small chunk of Bitcoin. I'm not going to go into that in this video, but UTXO management is something that you may need to know. Don't worry about that right now. Right now, if you're just looking at the fundamentals, if you're just learning the basics, you don't have to worry about that. Something that you need to consider is that if I wanted to send somebody Bitcoin, I can send it to them by just scanning a barcode. It's as simple as that, right? Very, very simple, very, very easy. I can send somebody Bitcoin within seconds by doing that. I mentioned private keys before. Private keys are something that are just a number. It's a string of numbers. Let's say this string of numbers, you have 110111. You can flip a coin 256 times, and every time you get heads, you write 1. Every time you get tails, you write 0. You have a private key, right? Very, very difficult to create. Very, very difficult to guess. If somebody does the same thing as you, the chances of them getting the same order, the same number is very, very low. As long as it's done randomly, the chances of them getting the same number as you is very, very low, right? It's 50% for each one. So the chances of getting 1 on the first one is 50%, but over time it gets harder and harder to get the same record, right? It becomes more and more difficult. I have a something that'll show you what that means. With Bitcoin, you want to be able to store it properly. You want to be able to have your storage set up. Wallets hold private keys. Wallets are basically just devices that hold your private keys. They can create the private keys. It's basically just a USB. That's it. I'll show you what it looks like. 1 second here. And let's pull it up. So this is a Trezor device. It's just a little USB. That's it. It just has a USB at the bottom. That's it. What these things do is they generate your private keys and they can hold your private keys. I don't use this Trezor. It's just here. It's an old wallet. I haven't used it for a while. It's just sitting there. But these things are used to hold your private keys. You can use multiple different brands. You can use different kinds if you want to. I would recommend Trezor, Coldcard, or Blockstream Jade. I would avoid Ledger. There are certain reasons for it. I'm not going to go into it in this, but there are certain reasons. Do your research. Just look into it. You'll be able to find it. Cold wallets are for long-term savings. When you have short-term savings, like let's say you have enough money to pay for, let's say you're going to a certain country where they accept Bitcoin, you may want to keep your Bitcoin on a hot wallet. A hot wallet is on your phone. It's basically a wallet that's connected to the internet at all times. The chances of somebody stealing your Bitcoin from your cold wallet are much lower than somebody stealing your Bitcoin from your hot wallet, right? Because it's connected to the internet. People around the world can access it, right? That's the thing. If your phone gets accessed, if your phone gets stolen, it's potentially that somebody can get into it and they can access your Bitcoin. They can also hack it. They can also get to it somehow. When you create your wallet, you're going to get something called a recovery phrase. Make sure you back it up. So let's go into what that is. I'll go into that in a bit. But there are certain levels for storage. You have level 1, which is in an exchange. So let's say you buy Bitcoin and you leave it on Coinbase. That's the exchange. That's the custodial service. Level 2 is single sig plus hot wallet. So let's say you have single sig plus your wallet on your phone. That's level 2, in my opinion. Level 3, this is in terms of level of security. Level 3 would be single sig plus cold wallet. So if you have that hardware device. Level 4 would be so what you have in level 1. So cold wallet plus self custody. But then you have multi-sig instead of single sig. Multi-sig is where you have, in terms of, let's say in the legacy financial system, you have a safety deposit box at a bank. You have a key and the bank has a key, right? Somebody basically created something like that with Bitcoin, where if you have a key and the bank has a key, you can access that vault. But if both of you don't have a key, you can't access the vault. Somebody basically created something like that with Bitcoin. It's called multi-sig. I'll link some details below. There's a 5th level, which is called collaborative custody, where you have institutions basically holding your keys for you. You have one key, one institution has one key, and then another institution has another key. Neither of these institutions have anything to do with one another. They can be in different jurisdictions. They can be completely separate, and they can't even collude. There's no way for them to collude, but they're completely separate. They're working completely separate businesses. They're designed as completely separate businesses. But what I'll do is I'll include a link below. You can read up on this. You can book a meeting with the Bitcoin advisor. They'll help you with the collaborative custody part of things, if you're interested. If that's something you're interested in, book a meeting with them. You can ask them questions if you want to. They'll help you with this, right? So they're great with that. But these are the levels of security for storage. When you create your wallet, you're going to get a set of 12 words, 12 or 24 words. Certain wallets give you 12, certain wallets give you 24. These words are created using something called a BIP39 word list. These words, so let's say if this device breaks, I can recover whatever was stored on this device by having these words. So let me show you what it looks like. These words would look like something like this. It can be in any order. The order has to be right and the words have to be right. So basically, for somebody to get access to your Bitcoin, they'd have to find the right words and they'd have to get them in the right order, right? So all these words are just random, completely randomly generated. Your wallet will do that for you. Your wallet's designed to do that for you. But if you have these words and you get another wallet, you can enter these words in the other wallet and you can use these to recover your Bitcoin. This is basically the password to your Bitcoin, if you want to think of it that way. You can recover your Bitcoin. You can move your Bitcoin to another wallet. Let's say if you memorize these and you need to leave your country for whatever reason, you can use these to recover your Bitcoin in another country. The chances of somebody actually taking your Bitcoin, your private keys, is very, very low. This is a graphic from whatisbitcoin.com. The chances of somebody actually taking your Bitcoin are 1 in 2.6 times 10 to the 36. So 1 in 2,658,455. This really, really big number at the bottom here. The chances of somebody taking your Bitcoin are as close to 0 as possible, right? Nobody's been able to crack the security that's behind Bitcoin. It's called SHA-256. Nobody's been able to crack it. Nobody's been able to break it. It's worked until now. I would strongly believe it'll work for the next 3 to 5 years. It may change in the future. We may have quantum computing, for example, that changes it. That's something you maybe need to pay attention to. Keep yourself informed on this. on this space. Keep yourself informed on how this works. Keep yourself informed on how Bitcoin works, how Bitcoin is supposed to work in the future. And I think you're going to be perfectly fine, even if things change. So there are multiple participants in the Bitcoin network. Nodes process transactions. They just make sure that the rules are being followed. Miners secure the network. They add blocks to the Bitcoin blockchain. They use their own resources. They're paid in Bitcoin. That's how Bitcoin comes into existence. Savers use Bitcoin as a store of value. Savers are basically holding Bitcoin, and they're contributing to the increase in value of Bitcoin, right? The Bitcoin that's being paid to the miners increases in value, and that's the only reason why Bitcoin can continue to decrease its supply over time, right? The supply keeps decreasing because the price keeps going. The price can keep going up as the supply decreases, and the value of the reward that these miners are getting keeps going up, right? Savers use Bitcoin as a store of value. Merchants can accept Bitcoin in exchange for goods and services. So what merchants can do is eventually they can start offering discounts. They can start accepting Bitcoin, and they can say, hey, if you pay us in Bitcoin, we're going to give you a 10% discount or a 5% discount, because there are so many advantages to it, right? Merchants don't have to pay for transaction fees. Merchants don't have to they don't have to rely on third parties. They don't have to be at risk of having their bank accounts closed. All this stuff. They don't have to worry about investing. They don't have to worry about having their money taken through inflation. They don't have to worry about all that stuff. That's what Bitcoin does, right? Merchants would benefit from this. I think as more merchants come up, more merchants are willing to accept Bitcoin. It'll incentivize people to own Bitcoin as a savings tool, right? They'll be willing to hold it because they know for a fact that if they hold this Bitcoin, they'll be able to buy more of whatever this merchant serves. They'll be able to buy more of it over time, right? When they save in Bitcoin, I think their purchasing power will increase over time, and it basically just solves most of the economic problems we have today. I think that's the circle that we're here. That's the cycle that we're in here, right? With all these market participants, all of these have their own purpose. All of them have their own way that they protect the network. They build the network. So what if the internet stops working? I don't think that'll be a problem. Over time, we're going to solve this. There are ways to transact, to send and receive Bitcoin through SMS, so text messages. Your wallet doesn't get impacted. So let's say the internet goes down for like a week, 2 weeks, 5 weeks. Your wallet doesn't get impacted. The value is still there. You just can't use it temporarily, right? The internet most likely won't go down all around the world. There will be parts of the world that still have internet. I'm sure of it. But I mean, again, there's something even more important. Shutdown. If the internet gets shut down, we're probably going to have much worse things to deal with, because think about how many things rely on the internet today, right? Almost everything relies on the internet. If the internet goes down, other things also go down. Same thing with electricity. People will tell you, oh, electricity will go down, internet will go down. What are you going to do then? The legacy financial system relies on it too, right? So if the internet goes down, it's not like the legacy system will survive. The legacy system will go down much faster. And I guarantee you that if the internet and the electricity comes back on, if we have access to the electricity, access to internet again, I guarantee you that Bitcoin will be back up and running before the legacy financial system. Another concern that people have is hard forks. If let's say, for example, if enough people want to change the rules and they create their own fork, they can do that, right? So if somebody wants to change the rules, let's say some of the nodes move from one set of rules to another, they can create something called a hard fork. They can change the rules. They can create their own coin, and whoever wants to follow them can follow them, right? The good thing here is that whoever has the regular BTC, the Bitcoin, they receive some of the coins from the hard fork. It's not like they don't receive those coins. They receive those coins as well. The people who had BTC before, they can actually sell their coins on the market if they want to, or they can just hold on to them. And if this new fork becomes what the future is, they still have those coins, right? In general, I think people will not move to another fork. The reason why we stick to Bitcoin is because Bitcoin is the one that has the longest chain, it has the longest history. It's the one that people think will survive 20, 30, 50 years from now, right? All these other, there have been hard forks and they've almost all failed. So something to consider. The adoption for Bitcoin is over time, it's increasing, right? This is not my chart. I found it on the internet. There was no source, but I mean, it's a regular adoption chart, right? In the beginning, you have innovators, and you have early adopters, and you have early majority, late majority, laggards, right? I think we're still in either innovators and early adopters. I think we're between the yellow and the red, right? I think we're somewhere in between. I don't think we've reached the early majority yet because most smart investors still see Bitcoin as a scam. Most investors still see Bitcoin as a scam. Most people have not figured it out yet. I think the people who have figured it out, the people who are close to it, are still visionaries. That's how I see it. But maybe I'm wrong. Maybe we're so far along already because people are saying that, oh, we've already hit a peak. I don't think that's true. 99% of the people that I know don't own Bitcoin. So what are the chances that 99% of everybody else owns it? Something has to be owned by the entire world for it to be in a bubble, for it to be the late majority or the laggards, right? We're not even close to that. Most people have not gotten to that point yet. This is a picture that I saw it's from the BTC Therapist on Twitter. Great account if you want to follow. They post a lot of pictures, great pictures. But essentially, the US dollar is your money over infinity. I know other people have posted this, but I just thought that this was very simple. Bitcoin is your money over 21 million, right? Because with US dollars, an unlimited number of dollars can be printed. You can print dollars at will till whenever you want to. On the other hand, with Bitcoin, you can't. You have 21 million. After that 21 million, there's going to be no more. There will never be more. One Bitcoin is equal to one Bitcoin. One US dollar is not equal to one US dollar, right? If you save one Bitcoin, you'll know for a fact that you'll have a certain percentage of the economy 20, 30, 50 years from now. On the other hand, when you have dollars, you have no clue how many dollars will be printed, right? You don't know how many dollars will be printed tomorrow, the next week, the next month, next year, 10 years from now. We have no clue, right? We have no idea how much debt the US government will be in. These are all things to consider, right? I personally think Bitcoin fixes everything. If you look at this chart, you see housing prices have dropped 99%. A house was costing 64,000 Bitcoin in 2011. The S&P 500 has dropped in terms of Bitcoin as well, dropped from something like 400 Bitcoin per S&P 500 unit. A unit is like $5,000. Back then it was about $1,000. It's gone up 5 times, but it's still lost 99.9% in terms of Bitcoin. Same thing with gold. Gold has lost 99%, right? 1 ounce of gold cost over 100 Bitcoin at one point. Or sorry, I think it was slightly under 100 Bitcoin. But whatever it was, it's gone down to 0.03 Bitcoin per ounce of gold. And that's going to keep dropping. Eventually, we're going to see 1 Bitcoin per house. We're going to see 1 house costing 1 Bitcoin. We're going to see the S&P 500 cost less than 0.01 Bitcoin. We're going to see 1 ounce of gold costing 0.01 Bitcoin or less. This is 0.03 Bitcoin. We're going to see it cost 0.01 or less. It's going to keep dropping, and I can almost guarantee it within the next 10 years. I think 1 house will cost less than 1 Bitcoin. So if you think about it, how many houses there are in the world versus how many Bitcoin there are, right? Everybody can use Bitcoin. Everybody can own Bitcoin. A lot of houses are held by people as investments. What happens when these people who hold them as investments want to get rid of them, right? When they're not profitable anymore. That's where I think things are going. But over time, that'll take some time. That'll take a while. It's not going to happen overnight. Probably take 5, 10, 15, 20 years. But once that trust is gone, that trust is not going to come back, right? That's something you need to know. Okay, so if you want to buy Bitcoin, if I have somehow convinced you in this video that Bitcoin is something that you should get access to, even if you have a small allocation. I have a video just talking about allocations. If you go on YouTube, just search for allocations, you can see it there. But if you want to buy Bitcoin, you can go through Coinbase, Swan, ShakePay, River, Gemini. I'm not going to give you any referral codes. Do your research. I don't know what's happening in the back end. For example, FTX went down. Everybody trusted them. Who knows, right? I have no idea. All I can tell you is buy your Bitcoin, take it off the exchanges ASAP, get it off the exchanges and put it on your wallets, right? Get your wallet, set it up, put it on the wallet. There are tons of videos on YouTube. I have a course that's on this if you're interested. I have information on this if you're interested. But make sure you get it off the exchange. However you do it, however you learn it, get it off the exchanges. I know a lot of people don't want to touch Bitcoin in cold storage, but they still want exposure, right? I would highly, highly recommend holding Bitcoin in cold storage. Don't use these ETFs. These ETFs came out and they give you exposure to Bitcoin, but I don't like them. I don't like the fact that they're held by a central party. It's almost like going back to gold, right? Gold was confiscated from people with Executive Order 6102 because a lot of gold was kept with central parties already, right? This is what's happening with the ETFs. The ETFs are kept in a central location. They're all kept with Coinbase. Almost all of them are kept with Coinbase, right? So if you wanted your Bitcoin at one point and the US government says, hey, we need your Bitcoin, we're going bankrupt, so we're going to keep it. You can't do anything about it. Your Bitcoin is gone. On the other hand, if you have it in cold storage, nobody can take it away from you. Nobody can control it. Nobody can stop you from spending it. All that stuff should be considered. I definitely think that's important. Before you buy Bitcoin, all the regular personal finance stuff, if you're interested, I have more content on this, just talking about personal finance, teaching about all that stuff. But pay off your high interest debts, build an emergency fund. You should have at least 3 to 12 months of emergency cash. The reason why I say that is because you could lose your job. You don't want to have to sell your Bitcoin if Bitcoin is down 90%. You don't want to sell it if it's down 50%. If you lose your job, you have fiat currencies. You have a little bit of fiat currency. You have to have some dollars. You have to have some whatever, euros, pounds. You have to have a little bit of it. 3 to 6 months is enough, I think. 3 to 12 months, whatever you're comfortable with. Depends on how stable your job is, how stable your income is. But you have to continue to build a basic knowledge of Bitcoin. I think right now, anybody who watched this video has that basic knowledge. If you want more knowledge, I have more resources. Check the description. I have tons of resources. I want to make sure that more people can get exposure. The more people that can get exposure, the fewer Bitcoin are held by BlackRock, Fidelity, all these big companies, all these massive companies, Bitwise, Arc. I don't want them to hold Bitcoin. I want regular people to hold Bitcoin in their own self custody, right? As more people understand Bitcoin, more people can get exposure, and more people can take advantage of it. More people can get themselves out of the rat race. They can take themselves out of the situation, the financial situation that they're in. If it's negative, they can take themselves out of it and they can benefit from this thing, right? This is the biggest wealth transfer in history, right? I'm telling you, house prices will drop below 1 Bitcoin. So if you can, they'll drop to 0.1 Bitcoin, they'll drop to 0.01 Bitcoin, but they'll drop to below 1 Bitcoin at one point. And I think that will be huge because at one point, 1 Bitcoin was worth $1. Right? Okay, so while you own Bitcoin, continue to learn how it works. I think that's key. It's the problem isn't not having exposure. The problem is not keeping what you have, right? There are a lot of people who sell what they have and they never get back to wherever they were before, right? I was luckily not in that position. I didn't sell any, but I didn't buy before either. I didn't start buying until 2022, right? Continue to learn how it works. Don't panic about price. Don't think about the price. Don't think, oh, this thing is going to zero. It's not. It's going to keep going up because of supply and demand. It's just math, right? It's just math. That's it. As supply decreases and demand increases, price will have to go up. Focus on accumulation. Focus on having more Bitcoin. If you can have more Bitcoin today than you had last week or last month, you're in a good position, right? Increase your income so you don't have to sell early in case you lose your job. Don't invest your rent money. This has to be something that you hold on to for 5 or 10 years. You can dollar cost average. You can buy $1 worth. I'm telling you, $1 worth every day, $1 worth every week will add up. Guarantee it. $1 worth every week, $1 worth every month. Do whatever you can. If you have $2, if you have $5, you have $10, whatever you can put into this, just dollar cost average. I created a video about the allocations. In my videos, you can check. You can see the list. It basically talks about if you had a 1% allocation, a 5% allocation, 10% allocation, how much you'd end up with. All these things are important. Continue to learn, continue to build, continue to accumulate, continue to build wealth for your family, your grandchildren, your great grandchildren. This is not for, it's not for you. This is for your grandchildren. This is for your lineage, right? This is for the people that come after you. You want them to not have to work to build wealth. You want them to be comfortable. You want to be able to help people if you need to, right? That's what this will do, right? Okay, so how much Bitcoin do you need? There's going to be a maximum of 21 million. 1 Bitcoin is 100 million Satoshis, 8 billion world population. In total, there's going to be 2.1 quadrillion Satoshis. So if you divide this with everybody equally, everybody in the world, 0.002 Bitcoin, 262,500 Satoshis. Right now, you can buy that for $168. When I was doing the Bitcoin for Beginners webinar for the first time, like that's the expanded version of this, there's a lot more information in that one. But when I was doing it for the first time, it was under $90. It's more than doubled, right? So the people who listened have already more than doubled their money, right? They've slightly less than doubled their money. But at one point, this will be $500, $1,000, $10,000. It'll keep going up, right? As more people realize this, as more people figure it out, they'll want to accumulate Bitcoin and they'll figure it out, right? They'll want to take it. So summary, money is corrupted. It does lose value over time. There's nothing you can do about this. It will continue to lose value over time forever. On the other hand, Bitcoin is a digital token. It has a finite supply. The Bitcoin network allows transfers of BTC. Nobody can corrupt it. Nobody can stop it. Nobody can stop these transactions from happening. Not your keys, not your coins. If you hold your Bitcoin in your own wallet, you own it. If your Bitcoin is held on an exchange, you don't own it. Anybody who had their Bitcoin with FTX and they withdrew, let's say, so FTX went bankrupt in November 2022. If you took your Bitcoin off FTX, you would have been fine, right? Because people left it to the last second, they lost everything. That was the problem. If you have your Bitcoin, take it off the exchange. You need to take it off the exchange. That's key. You don't have to have that much Bitcoin if you want to do very well. There was a guy maybe 12 years ago that was saying buy $1 of Bitcoin. That $1 would probably be worth over $1 million today, right? Just buy some. That's all it is. Learn about it, accumulate even a little bit, even if you have 1% of your portfolio in it. If you have $1 million and you buy $10,000 worth of Bitcoin, it's not going to hurt you. But if that $1 million portfolio goes to zero, you have much bigger problems to deal with, right? I think learning how Bitcoin works, this webinar, I think it helps, of course, but there's a lot of questions that you probably have, like, what is UTXO management, for example? What is this topic? What is that topic? There's tons of topics on this, right? So to make teaching a little bit easier, I created a community. This community is called it's called the Mindful Money and Bitcoin community. In this community, I teach all kinds of content. There's live sessions. We have live sessions every week. There's a course, a Bitcoin fundamentals course, Bitcoin purchase and storage class. You have the personal finance basics courses. You have this is just an ebook, 10 Bitcoin misconceptions, personal finance full course, and then I have tons of other lessons. Right? These are just I'm adding them. I'm adding more and more. I'm adding more every single day. This is going to keep going. All of this costs $40 a month. And if you're interested in something like this, let me know. I'll have a link at the bottom. If you just click that link, you can join it. I think this could be very valuable. It'll help you with just learning. One of the great things here is that I'm actually providing a reward, right? I'm providing if people want to participate, if people want to contribute, I'm providing a Bitcoin reward. So if you want to participate in this and you contribute and you add posts and you add content, I will make sure that the top contributor gets a reward. There's a lot here, a lot of information. The information doesn't stop, right? I'm going to keep adding more. I have a feeling that this thing will go to millions of dollars, right? And if what's stopping you from buying Bitcoin is just a lack of knowledge, I think this is the place to be. This community is where you should be. Like I said, it's $40 a month. It's going to keep giving you more and more information. I will make sure that it's worth your while. It's worth the money that you put in. Check it out. I also have a free ebook, a free Bitcoin ebook. Check that out as well. I'll include all these links at the bottom in the description here. And that's about it. I hope you enjoyed. I hope this made a difference. This was basically my attempt at orange pilling you to convince you that Bitcoin is the thing that could maybe save your life, maybe save your finances. So if you found this valuable, I would strongly appreciate it if you left me a thumbs up. You left a positive comment. Let me know what you think. Let me know what your opinion is on this, what your thoughts are. Thank you so much for watching. I hope you have a great rest of your day. Bye for now.